June 9th through 10th, 2020, Federal Reserve FOMC Meeting Summary. The information from this video is from federalreserve.gov and the Federal Open Market Committee webpage on that website, and it covers the June 9th through 10th statement and projection materials for that meeting. Federal Reserve press release for release at 2 p.m. Eastern Daylight Time, June 10th, 2020. The Federal Reserve is committed to using its full range of tools to support the U.S. economy in this challenging time, thereby promoting its maximum employment and price stability goals. The coronavirus outbreak is causing tremendous human and economic hardship across the United States and around the world. The virus and the measures taken to protect public health have induced sharp declines in economic activity and a surge in job losses. Weaker demand and significantly lower oil prices are holding down consumer price inflation. Financial conditions have improved, in part reflecting policy measures to support the economy and the flow of credit to U.S. households and businesses. The ongoing public health crisis will weigh heavily on economic activity, employment, and inflation in the near term, and poses considerable risk to the economic outlook over the medium term. In light of these developments, the committee decided to maintain the target range for the federal funds rate at 0 to 1/4% The committee expects to maintain this target range until it is confident that the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. The committee will continue to monitor the implications of incoming information for the economic outlook, including information related to public health, as well as global developments and muted inflation pressures, and will use its tools and act as appropriate to support the economy. In determining the timing and size of future adjustments to the stance of monetary policy, the committee will assess realized and expected economic conditions relative to its maximum employment objective and its symmetric 2% inflation target. This assessment will take into account a wide range of information, including measures of labor market conditions, indicators of inflation measures, and inflation expectations, and readings on financial and international developments. To support the flow of credit to households and businesses over the coming months, the Federal Reserve will increase its holdings of Treasury securities and agency residential and commercial mortgage-backed securities, at least at the current pace, to sustain smooth market functioning, thereby fostering effective transmission of monetary policy to broader financial conditions. In addition, the open market desk will continue to offer large-scale, overnight, and term repurchase agreement operations. The committee will closely monitor developments and is prepared to adjust its plans as appropriate. Voting for the monetary policy action were Jerome H. Powell, Chair, John C. Williams, Vice Chair, Michelle W. Bowman, Lal Brainard, Richard H. Clarida, Patrick Harker, Robert S. Kaplan, Neil Kashkari, Loretta J. Mester, and Randall K. Quarles. Decisions regarding monetary policy implementation. The Federal Reserve has made the following decisions to implement the monetary policy stance announced by the Federal Open Market Committee in its statement on June 10, 2020. The Board of Governors of the Federal Reserve System voted unanimously to maintain the interest rate paid on required and excess reserve balances at 0.10% effective June 11, 2020. As part of its policy decision, the Federal Open Market Committee voted to authorize and direct the open market desk at the Federal Reserve Bank of New York until instructed otherwise to execute transactions in the System Open Market account in accordance with the following domestic policy directive. Effective June 11, 2020, the Federal Open Market Committee directs the desk to undertake open market operations as necessary to maintain the federal funds rate in a target range of 0 to 1/4% Increase the system open market account holdings of Treasury securities, agency mortgage-backed securities, MBS, and agency commercial mortgage-backed securities, CMBS, at least at the current pace to sustain smooth functioning of the markets for these securities, thereby fostering effective transmission of monetary policy to broader financial conditions. Conduct term and overnight repurchase agreement operations to support effective policy implementation and smooth functioning of short-term U.S. dollar funding markets. Conduct overnight reverse purchase agreement operations at an offering rate of 0.00% and with a per counterparty limit of $30 billion per day. The per counterparty limit can be temporarily increased at the discretion of the chair. Roll over at auction all principal payments from the Federal Reserve's holdings of Treasury securities and reinvest all principal payments from the Federal Reserve's holdings of agency debt and agency MBS and all principal payments from holdings of agency CMBS and agency CMBS. Allow modest deviations from stated amounts for purchases and reinvestments if needed for operational reasons. Engage in dollar roll and coupon swap transactions as necessary to facilitate settlement of the Federal Reserve's agency MBS transactions. In a related action, the Board of Governors of the Federal Reserve System voted unanimously to approve the establishment of the primary credit rate at the existing level of 0.25%. This information will be updated as appropriate to reflect decisions of the Federal Open Market Committee of the Board of Governors regarding details of the Federal Reserve's operational tools and approach used to implement monetary policy. More information regarding open market operations and reinvestments may be found on the Federal Reserve Bank of New York's website. Projection materials for release at 2 p.m. Eastern Daylight Time, June 10, 2020. Table 1. Economic projections of Federal Reserve Board members and Federal Reserve Bank presidents under their individual assumptions of projected appropriate monetary policy, June 2020. Advance release of Table 1 of the summary of economic projections to be released with the FOMC minutes. Note beneath the table. Note: projections of change in real gross domestic product, GDP, and projections for both measures of inflation are percentage changes from the fourth quarter of the previous year to the fourth quarter of the year indicated. PCE inflation and core PCE inflation are the percentage rates of change in, respectively, the price index for personal consumption expenditures, PCE, and the price index for PCE excluding food and energy. Projections for the unemployment rate are for the average civilian unemployment rate in the fourth quarter of the year indicated. Each participant's projections are based on his or her assessment of appropriate monetary policy. Longer-run projections represent each participant's assessment of the rate to which each variable would be expected to converge under appropriate monetary policy and in the absence of further shocks to the economy. The projections for the federal funds rate are the value of the midpoint of the projected appropriate target range for the federal funds rate or the projected appropriate target level for the federal funds rate at the end of the specified calendar year or over the longer run. The December projections were made in conjunction with the meeting of the Federal Open Market Committee on December 10th through 11th, 2019. One participant did not submit longer run projections for the change in real GDP, the unemployment rate, or the federal funds rate in conjunction with the December 10th through 11th, 2019 meeting, and one participant did not submit such projections in conjunction with the June 9th through 10th, 2020 meeting. No projections were submitted in conjunction with the March 2020 FOMC meeting. 1. For each period, the median is the middle projection when the projections are arranged from lowest to highest. When the number of projections is even, the median is the average of the two middle projections. 2. The central tendency excludes the three highest and three lowest projections for each variable in each year. 3. The range for a variable in a given year includes all participants' projections, from lowest to highest, for that variable in that year. 4. Longer run projections for core PCE inflation are not collected. Figure 1. Medians, central tendencies, and ranges of economic projections 2020 through 22 and over the longer run. The first table shows change in real GDP. The second table shows the unemployment rate. The third table shows PCE inflation. Note: definitions of variables and other explanations are in the notes to Table 1. The data for actual values of the variables are annual. Figure 2. FOMC participants' assessments of appropriate monetary policy, midpoint of target range, or target level for the federal funds rate. Note: each shaded circle indicates the value, rounded to the nearest 1/8 percentage point, of an individual participant's judgment of the midpoint of the appropriate target range for the federal funds rate or the appropriate target for the federal funds rate at the end of the specified calendar year or over the longer run. One participant did not submit longer run projections for the federal funds rate. Explanation of economic projections charts. The charts show actual values and projections for three economic variables based on FOMC participants' individual assessments of appropriate monetary policy. Change in real gross domestic product, GDP, as measured from the fourth quarter of the previous year to the fourth quarter of the year indicated. Unemployment rate, the average civilian unemployment rate in the fourth quarter of each year. PCE inflation, as measured by the change in the personal consumption expenditures, PCE, price index, from the fourth quarter of the previous year to the fourth quarter of the year indicated. Information for these variables is shown for each year from 2015 to 2022 and for the longer run. The solid blue line labeled actual shows the historical values for each variable. The solid red lines depict the median projection in each period for each variable. The median value in each period is the middle projection when the projections are arranged from the lowest to the highest. When the number of projections is even, the median is the average of the two middle projections. The range and central tendency for each variable and each projection period are depicted in box and whiskers format. The blue connected horizontal and vertical lines, whiskers, represents the range of projections of policymakers. The bottom of the range for each variable is the lowest of all projections for that year or period. Likewise, the top of the range is the highest of all the projections for that year or period. The light blue shaded boxes represent the central tendency, which is a narrower version of the range that excludes the three highest and three lowest projections for each variable in each year or period. The longer run projections, which are shown on the far right side of charts, are the rates of growth, unemployment, and inflation to which a policymaker expects the economy to converge over time, maybe in 5 or 6 years, in the absence of further shocks and under appropriate monetary policy. Because appropriate monetary policy, by definition, is aimed at achieving the Federal Reserve's dual mandate of maximum employment and price stability in the longer run, policymakers' longer-run projections for economic growth and unemployment may be interpreted, respectively, as estimates of the economy's normal or trend rate of growth and its normal unemployment rate over the longer run. The longer-run projection, shown for inflation, is the inflation judged to be most consistent with the Federal Reserve's dual mandate. Explanation of policy path chart. This chart is based on policymakers' assessments of appropriate monetary policy, which, by definition, is the future path of policy that each participant deems most likely to foster outcomes for the economic activity and inflation that best satisfy his or her interpretation of the Federal Reserve's dual objectives of maximum employment and stable prices. Each shaded circle indicates the value, rounded to the nearest 1/8 percentage point, of an individual participant's judgment of the midpoint of the appropriate target range for the federal funds rate or the appropriate target level for the federal funds rate at the end of the specified calendar year or over the longer run. Thank you for watching this Nebula Network video. Don't forget to subscribe to keep up to date on new video releases.